Have you ever wondered how much you should be paying yourself each and every month for running your business? I've been helping a couple of my clients with their cash flow to help set them up for success to end off 2017 powerfully. And some of the clients are overpaying themselves and some are underpaying themselves. Well, how do you know what the happy medium is? It's a pretty straightforward equation. You actually need to have a larger picture of what your numbers are. You have revenue that comes into your business. Let's just say $100 comes in. You're overpaying yourself if you're taking that $100 out right away because you've just made $100. Your business is the one who made the $100, not you. Your payroll or your getting paid from your business is an expense that is a line item in your monthly budget. So when $100 comes in, what we want to be thinking is, what percent do we want to allocate to your salary? And if you pay yourself on a steady flow, either maybe the 15th and 30th or once a month or whatever works best for you and your family, then you pay yourself that percentage based on how much money comes in. A really basic, easy equation, if you really have no idea, is to think about your business in terms of thirds. 30% goes into your government savings account, if you will, or for your taxes. That also gives you a little bit of a buffer for a rainy day fund in case something comes up, because there's going to be unexpected costs that come up in your business. So 30% is going to go there. 30% is going to go to your operating costs. That's in running your business, the software that you need, any monthly expenses that you have, any people who work for you. It will help you understand how much you can afford to hire and outsource. And then if you allocate yourself 30% of whatever comes in, that leaves 10%. What if you allocated that 10% to be your profit? You see, so often I see people wanting to pay themselves their profit, but it doesn't work that way. That means you're never going to be profitable. There's never going to be anything left over. A true profitable business has money left over at the end of the month after all expenses have been paid, including you. So if you go 30, 30, 30, 10, then that gives you 100% of that $100. $30 goes into your tax saving, $30 goes into your operating fund, $30 goes into your personal account, and $10 sits as profit. If you can run your business on $100 a month, you can run it on $90 a month and you're not going to miss that $10. But that allows you to create and make and run a profitable business, which, as you and I all know, is one of our goals. So allocate a percent of revenue to what it is that you want to pay yourself. $100 in is not $100 in your pocket if you follow the really simple formula. And listen, I know there's going to be differences and everybody has their own individual situation, but that just gives you a very general way to allocate the $100 that comes in. Think in your head, for every 100 that comes in, I get 30 of it. For every 1,000 that comes in, I get 300, 10,000, 3,000, etc. It's just a great place to start, so you know, and so you know that you're going to have enough money to keep in business and your lights on, because you and I know how important your business is and the impact that you're having in the world. 30, 30, 30, 10. Talk to you later.